All right. Pump and dump schemes, huh?
Yeah.
That's what we're diving into today.
Big topic.
Yeah, it really is. And I have to say, the more research I did for this, the more I was like, whoa,
Right.
it's kind of scary how easy it is to get caught up in all the hype, you know?
It really is. It is.
So many people have sent in articles and research and excerpts and everything.
Yeah.
So I'm really excited to unpack all this with you today and make sure that everybody listening can spot these schemes right from the get-go. So maybe just to start us off,
Sure.
could you just give us a concise definition?
Yep.
Like, what actually is a bump and dump scheme?
So at its core, it's market manipulation, plain and simple.
Okay.
The whole goal is to artificially inflate the price of an asset, create this frenzy, get everybody excited, and then the perpetrators, the folks behind it, they cash out at the expense of everyone else who got caught up in all that hype.
Okay.
Yeah, it's really a bait and switch.
Yeah.
It preys on our very human tendency to get swept up in the fear of missing out, you know?
Oh, absolutely.
That FOMO is real.
The FOMO is real. But, you know, from what I've been reading, it seems like these schemes, they kind of go above and beyond just hype, you know? Like, they're really elaborate. They're almost like a staged performance or something.
It's true.
It's crazy.
Think of it almost like a play with two acts.
Okay.
Act one is the pump,
Right.
building up that anticipation, making the asset seem like the next big thing.
Gotcha. Okay.
You see these tactics like spreading rumors, making up news, even orchestrating fake celebrity endorsements. And then, of course, you can't forget social media.
Of course not.
Social media is huge in this, amplifying everything, creating that echo chamber.
Well, you know me. I'm always on social media seeing what's trending.
Of course.
And even I was pretty surprised at the level of like just blatant manipulation that's happening on some platforms, you know, like one of the articles you sent me talked about this group on Telegram, I think it was.
Yeah, Telegram is a big one.
Where they were coordinating a pump and dump for a penny stock.
Right, and that's a good example of how they exploit
Yeah.
the unique features of these different platforms, right? So Telegram, you can create these private groups, you can control the information very tightly, and it goes straight to your target audience.
It's like this little exclusive club.
Exactly.
Where you feel like you're in on a big secret or something, which makes you even more vulnerable to like that manipulation.
Absolutely. And because these platforms often lack the same level of oversight that you see in traditional financial markets, it's easier for these groups to just operate under the radar.
It's like the Wild West of investing out there.
Yeah, for sure.
Like, who knows what's going on?
Totally.
It's really easy to get lost in all the hype, you know? But before we get totally swept away here, let's talk about the assets themselves.
Okay, sure.
You mentioned penny stocks, but are those like the only targets for these schemes?
So technically, any asset can be a target.
Okay.
But pump and dump schemes tend to go toward the assets that are easier to manipulate.
Right.
And that's where your penny stocks, your small cap cryptocurrencies, those come in.
Yeah.
Their liquidity is lower, meaning fewer shares or coins are being traded. So they're way more susceptible to these big price swings.
Right, right.
It's like, you know, if you imagine pushing a small boulder versus a giant one, you know, it's going to take a lot less force to get that small one rolling.
Yeah, that's a really good analogy. And it really shows why these schemes are so dangerous. You know, we always associate them with penny stocks and things.
All right.
But, you know, you're right. Any asset could be a target.
It could, yeah.
It's a bit unnerving.
It is.
I have to admit.
Yeah.
It's a little scary.
It's a reminder that we all need to be vigilant.
Yeah.
Regardless of what you're investing in, you know.
Yeah.
Even with crypto.
Yeah.
You have decentralized exchanges, which are getting more popular. But that lack of centralized oversight, it can actually create opportunity for manipulation.
So it's not just about the asset.
Right.
It's also about the environment, right?
Exactly. Exactly.
Where it's all happening, where it's being traded. Speaking of trading, one of the things that really kind of stuck with me in the research was how they manipulate the trading volume to make it look like there's a lot of demand when there's not.
Yes.
Can you explain a little bit about how that works?
Yeah. So imagine you're at an auction.
Okay.
And you see this bidding war break out over something that looks totally ordinary, you know?
Right. Right.
Suddenly you're thinking, maybe I'm missing something. Maybe this thing's way more valuable than I thought.
Yeah, yeah. For sure.
That's the psychological effect that they're going for.
Okay.
When they manipulate trading volume, you know?
Okay.
And they use techniques like wash trading, where they're basically just trading the asset back and forth amongst themselves.
Oh, wow.
Just to create this flurry of activity.
So they're just creating this fake buzz.
Yeah. Creating artificial energy to draw in these unsuspecting investors.
Ugh, wow.
And it works because most people assume that high trading volume equals high demand, right?
Right, of course.
So it looks like the asset is on the rise.
Yeah.
But in reality, it's all just a mirage.
Yeah.
A carefully constructed illusion.
And it's an illusion that can, like, disappear in a second.
It can, yeah.
Right. And then everybody who bought in during that fake hype, they're left holding the bag.
Exactly.
When the price crashes.
Yeah, the price inevitably crashes.
It's like a balloon deflating after it's been popped or something, you know?
Right.
But the air escaping is actually people's money.
Yeah, exactly.
It's kind of heartbreaking when you think about the impact this can have on people.
It is.
You know, victims of these schemes.
Yeah, absolutely.
It's a really stark reminder that behind all the smoke and mirrors of these schemes, there are real people being affected by this.
For sure.
Whose lives are being affected.
Yeah. Absolutely, yeah. And the emotional toll can be just as devastating as the financial loss.
Yeah, totally.
You know, a lot of people feel betrayed, foolish, ashamed.
Yeah.
And those feelings can make it really difficult to even talk about what happened.
Absolutely.
Or to seek help.
Right.
Right.
It's important to remember that anybody can be a victim of this, right? It's not about intelligence or, you know, how financially savvy you are.
No, not at all.
These people, they're skilled manipulators, right?
Right.
They play on our emotions.
Wow.
They exploit our vulnerabilities.
Absolutely. And they're constantly evolving, you know?
Right.
The tactics are always changing.
Yeah, one of the things that really stood out to me in the research was just how sophisticated these schemes are getting.
It's true.
Like, one article even talked about how some groups are using AI now to, like, generate fake news articles and create these, like, super realistic social media profiles to spread their message.
Yeah, that's a disturbing trend.
It is.
It really is.
It's scary.
It underscores the need for constant vigilance.
Right. Yeah.
You can't just rely on common sense or the traditional methods of verification anymore.
Right.
We need to be aware of these new tools and technologies that are being used against us, basically.
So it's like this constant cat-mouse game, you know?
It is.
Where the scammers are trying to, like...
Outsmart,
the investors and the regulators and everybody else.
It really is.
It's crazy.
It highlights the importance of education and awareness.
Yeah.
The more we understand about how these schemes work and the tactics that are being used, the better we'll be at protecting ourselves.
Let's talk about protection. So let's say somebody realizes, oh, no, I've gotten caught up in this. What are the first steps they should take?
So the most important thing is to act quickly.
Okay.
The first thing you want to do is stop trading the asset.
Right.
Immediately. Don't try to ride it out. Or buy more, thinking you will recoup your losses.
Right.
It'll probably just make it worse.
Just cut your losses and get out?
Exactly. Then report the scheme to the right authorities.
Okay.
So in the U.S., that would be the SEC, you know, Securities and Exchange Commission.
Right.
If it's stocks or if it's commodities, the CFTC.
Okay.
Commodity Futures Trading Commission.
Okay. Got it. And reporting it, I think, is really crucial, right? Not just for your own sake, but also to try and protect other people from falling into the same trap.
Absolutely. It helps the authorities track the patterns, identify the perpetrators, hopefully bring them to justice.
Absolutely. And beyond reporting, are there other things that a victim should do to try and mitigate the damage?
Yeah. Definitely.
Yeah.
You want to monitor your accounts very closely, especially if you shared any sensitive financial info with the scammers. Watch for unauthorized transactions, suspicious activity, anything like that.
Stay vigilant even after the fact.
Right. Exactly. You never know.
Okay.
And then if you suffered significant losses, you might want to consider an attorney.
Okay.
Someone who specializes in investment fraud.
Right.
They can advise you on the legal options for recovering your funds.
Right.
Or taking action against whoever was responsible.
So it sounds like seeking professional help, both legal and financial, is really important in this situation.
It can be really helpful.
Yeah.
Especially navigating the aftermath of these schemes.
And, you know, even though it's a tough situation, it's important not to blame yourself, right?
Exactly.
Like, these schemes are designed to deceive even experienced investors. It's not about being, you know, foolish or anything like that.
It's not a reflection of your intelligence.
Exactly.
Or your financial savviness.
It's the perpetrators who are responsible.
Right.
Right. Ultimately, it's their actions.
And, when victims speak out, when they seek help, it raises awareness.
Right.
It can help prevent others from falling prey to the same scams.
Absolutely.
So it's important to remember that.
Okay, so let's shift gears a little bit and talk about prevention. Right.
Yeah.
We talked about how important education and awareness is, but what are some specific red flags that people should be looking out for?
Okay, well, one of the most obvious ones is unrealistic promises.
Okay.
If an investment opportunity is promising guaranteed returns or gains that are way higher than the market average, be wary, be very cautious.
Because it's so tempting to believe that, right?
It is.
Especially if you're hoping for those
big
quick profits.
Yeah, exactly.
Yeah.
But remember, there's no such thing as a risk-free investment.
Right.
If it sounds too good to be true, it probably is.
That's such a classic line.
It's true, though.
It's true.
But it's true for a reason.
That it's true, yeah. So a healthy dose of skepticism is key here.
Absolutely.
Yeah.
Another red flag is a lack of transparency.
Okay.
Legitimate companies are usually pretty upfront about their operations, financials, things like that.
Yeah.
So if you can't find detailed info about the company or the asset, or if it seems vague or evasive, that's a warning sign.
It's like looking under the hood of a car before you buy it.
Right. Exactly.
You want to make sure everything's in order.
Exactly.
There's no, hidden problems.
Right. Yeah. You should also be wary of pressure tactics.
Okay.
If they're trying to rush you into a decision.
Yeah.
Create a sense of urgency. Using fear-based language like, you'll miss out.
You'll miss out.
Exactly.
Yeah.
That's a big red flag.
It's like they're trying to short-circuit your...
Yeah, they're trying to bypass...
Yeah, your logical brain. Yeah. And just get you to act on impulse. Exactly. And stammers know that when we're emotional, we're more likely to make mistakes.
Right.
So take a step back, Breathe. Do your due diligence. Due diligence, yeah, super important.
Yeah.
Okay, so speaking of due diligence, how can investors, really verify the information that they're seeing, especially online, on social media?
That's a great question, and it's tricky.
It's tough.
Because misinformation just spreads so quickly online.
Yeah, it really does.
One of the most important things is to check the source.
Okay.
Where's the information coming from?
Right.
Is it an anonymous account?
Yeah.
A website you've never heard of?
Right.
Be skeptical.
Yeah, don't just take anything at face value.
Exactly.
No matter how convincing it sounds.
No matter how convincing, look for established, reputable sources.
Okay.
For financial news and information.
Okay.
Websites of regulatory bodies, like the SEC or FinRA.
Right.
Those are valuable.
Okay.
Trusted financial publications, websites.
It's like checking the credentials of a doctor before you let them operate on you.
Yeah.
You want to make sure they have the experience and expertise to be advising you.
And when you find information, don't just stop at the headline.
Right.
Or the first paragraph. Dig deeper. Read multiple sources.
Yeah.
Look for independent verification of whatever claims they're making.
So be a critical consumer of information.
Exactly.
Especially when it comes to our money.
Right. And remember, even if a source seems legit, it's always good to get a second opinion. Right. Especially before making any big investment decisions.
So it's about diversifying our sources of information.
Yes.
Just like we diversify our portfolios, right?
Exactly.
Okay. That's a really good way to put it. Now, we talked about some general red flags, but let's get into some specifics,
Sure. Yeah.
One of the articles mentioned fake testimonials and endorsements. How can you actually spot those?
Fake testimonials can be hard to spot.
Yeah.
Because they're designed to look so real.
Yeah. Right.
But there are some things you can look for.
Okay.
Pay attention to the language they use. If it's overly enthusiastic.
Yeah.
Or using really generic phrases that could apply to anything.
Yeah.
Red flag.
It's like those stock photos,
Exactly.
Of people smiling and pointing at a computer screen. You're like,
it doesn't tell you anything.
That tells me nothing.
Nothing specific.
Yeah, exactly.
Also, look for inconsistencies.
Okay.
If all the testimonials are just glowing, super positive, no mention of any downsides or risks, that's suspicious.
It's like reading a movie review.
Yeah.
Where every single person gives it 5 stars, you know?
Right.
You're like, come on.
It's too good to be true.
Yeah, it's too perfect to be real.
Exactly. And if you can try to verify the identities of the people giving the testimonials,
right.
Do they have a real online presence?
Yeah.
Or do the profiles look fake or recently created?
Right.
Things like that.
So do a little detective work.
Exactly.
Look for inconsistencies, clues,
Right.
that might point to deception.
And if something feels off,
Yeah.
trust your gut.
That's so important.
Yeah.
I think sometimes we have that intuitive sense
I do.
that something isn't right.
We do.
But we ignore it.
Yeah.
Yeah,
it's true.
And especially when it comes to our finances.
Right.
I think it's better to just
Better safe than sorry.
err on the side of caution,
Absolutely.
Okay, let's talk about manipulating trading volume.
Mm-hmm.
Like, how can investors tell if the volume they're seeing is legit or if it's been artificially inflated?
So this can be tricky.
Yeah.
Without specialized tools, But there's some things to look out for.
Okay.
Look for sudden, dramatic spikes in volume that aren't connected to any news or events
Right.
about the company or the asset.
It's like a flash flood in the desert,
Exactly.
Comes out of nowhere. It can be just as destructive.
That's a good analogy.
Right.
And if you see that kind of unusual activity, dig deeper.
Yeah.
Try to figure out what's going on.
Yeah, don't just blindly follow the crowd.
Exactly.
Do your own research. Make sure you understand the underlying factors.
And remember, even if the volume looks legit,
it
doesn't necessarily mean the investment's a good one.
Right.
It's just one piece of the puzzle.
Right. It's about looking at the whole picture.
Yes.
Right. Not just one isolated data point.
Absolutely. And always keep in mind, past performance is not an indicator of future results.
Right.
Just because an asset has done well in the past doesn't mean it's going to continue doing well.
Especially in these pump and dump situations.
Exactly. Where it's been artificially inflated.
Artificially inflated, right? Okay. So don't let the hype.
Don't let it
cloud your judgment.
Your judgment,
Okay, so stay grounded. Stay informed.
Stay
skeptical. Right.
And remember, there are resources out there.
Right.
Don't be afraid to reach out to a financial advisor.
Okay.
Or a trusted expert.
Yeah.
If you have any questions.
Absolutely.
Oracle.
Yeah. It's like having a financial co-pilot, right?
That's a great way to put it.
To help you navigate, the sometimes turbulent skies of investing.
Exactly.
We've covered so much ground today.
We have.
I mean, from the psychology behind these schemes to the tactics they use to deceive investors.
Yeah.
But before we wrap up, I want to circle back to what you said earlier about the emotional toll these schemes take.
Yes, it's important to remember that beyond the financial losses, there's often this feeling of betrayal, shame, self-blame.
Right.
It can be so isolating.
It's like having the rug pulled out from under you,
Yeah, it really is.
Financially and emotionally. It just shakes your confidence, makes you question your own judgment.
Absolutely.
Right.
And that's why it's so important to talk about it.
Yeah.
To break the silence.
Right.
Let victims know they're not alone.
Yeah.
There are support groups, therapists, resources
to
help people cope
with
this emotional fallout.
It's a reminder that healing from financial trauma is just as important as recovering the money.
Absolutely. And part of that healing is empowering ourselves with knowledge.
Right.
Understanding the more we know about how these schemes work, the better we'll be at spotting them.
Right.
And avoiding becoming victims ourselves.
Knowledge is power in this case, for sure.
It is.
So, as we approach the end of our deep dive today, what's the most important message you want our listener to take away?
I think vigilance is paramount.
Okay.
Whether you're a seasoned investor or just starting out, approach every investment opportunity with a healthy dose of skepticism.
Right.
And do your due diligence before making any decisions.
Don't get swept up in the hype.
No, don't let it.
No matter how tempting it seems.
Exactly. If something sounds too good to be true, it probably is.
It probably is,
Trust your instincts. Ask questions. Don't be afraid to get a second opinion from a trusted advisor.
So stay informed.
Stay
grounded.
Grounded and trust your gut.
Trust your gut.
Right. Absolutely. All right. Well, a huge thank you for sharing your expertise with us today.
Of course. My pleasure. I know I learned a lot, and I hope our listeners did too.
Yeah, I hope so too.
And remember, everyone, the more we talk about these issues, the more we can empower ourselves and others to make smart decisions.
Informed decisions.
Right. And protect ourselves from harm.
Exactly.
Okay. And to you, dear listener, thank you for joining us on this deep dive into the world of pump and dump schemes.
Yeah, it's a wild world out there. Host.
It is a wild world out there.
It is, yeah.
So knowledge is your best defense.
Absolutely.
Stay curious, stay vigilant.
Stay skeptical.
And until next time, happy investing.
Happy investing.
It's like having somebody in the passenger seat with you, you know, like a financial co-pilot to help you navigate this crazy world.
Absolutely.
We've talked about so much today.
We have.
The psychology behind these schemes, the specific tactics they use to deceive investors.
Yep.
But before we wrap up, I want to circle back to something you mentioned earlier.
Sure.
About the emotional toll
Yeah.
that these schemes can take on victims.
Right. It's important to remember that beyond the financial losses, there's this whole other layer, you know, of emotional distress.
Right.
A lot of people feel betrayed, ashamed, they blame themselves.
Yeah.
And it can be really hard to deal with.
Right.
It can be very isolating and difficult to process.
Yeah. It's like having the rug pulled out from under you.
It is.
You know? Both financially and emotionally.
Yeah.
Like it shakes your confidence, makes you question your judgment.
Absolutely.
It's tough.
It is.
So what advice would you give?
Talk about it.
Yeah.
That's the most important thing.
Okay.
Break the silence.
Yeah.
You know.
Yeah.
Let victims know they're not alone.
Right.
There are support groups, therapists, other resources that can help people cope with the emotional fallout.
So it's not just about the money. It's about healing from the trauma.
Yeah, it's a process. And part of that is empowering ourselves with knowledge, right?
Yeah.
Understanding.
Okay.
The more we know about how these schemes work, the better we'll be at spotting them and avoiding becoming victims ourselves.
Knowledge is power, that's for sure.
It really is.
So as we wrap up our deep dive today, what's the most important message you want our listener to take away?
I think vigilance is key.
Okay.
Whether you're brand new to investing or you've been doing it for years, you have to approach every opportunity with a healthy dose of skepticism.
Right.
Do your due diligence before making any decisions.
Don't get swept up in the hype.
No, don't. No matter how tempting it seems.
Yeah, it's so easy to fall for it.
It is. It is. If something sounds too good to be true, it probably is.
It probably is.
Trust your instincts. Ask questions. Never be afraid to get a second opinion from a trusted advisor.
So stay informed, stay grounded. Trust your gut.
Trust your gut, yes.
All right, well, huge thank you.
My pleasure.
For joining us today and sharing your expertise.
Happy to be here.
I know I learned a lot, and I hope our listeners did too.
Me too.
And to our listeners, thanks for tuning in.
Yeah, thanks for listening.
To this deep dive into the world of pump and dump schemes.
It's a crazy world out there.
It is, but, you know, we're all in this together. We can help each other out.
Absolutely.
We can learn from each other.
For sure.
So stay curious, stay vigilant.
Stay skeptical.
And until next time.
Happy investing.
Happy investing.